Penny stock, pump and dump, wolf of Wall Street nowadays. A penny stock market is a form of securities trading in the United States, but not an official exchange. It is regulated differently by Securities and Exchange Commission, SEC. The SEC defines penny stocks as an equity that has a share price of under $5. So this means that there are no buy or sell limits imposed on penny stocks, which makes them more attractive for traders looking to make quick gains. However, they also have less liquidity than larger shares, so it's difficult to get in and out of positions without moving the price substantially. So now the question is, how to make money in penny stocks? Or is it just a pump and dump scheme? What are penny stocks? You've probably heard of penny stocks and know these types of stocks represent a good way to make money, but many people don't understand what they really are. Penny stocks are often traded by individual investors because they can be very volatile and unpredictable. This volatility makes them prime targets for pump and dump schemes. Penny stocks are low-price stocks issued by small, unproven companies. They are characterized by low capitalization and price under $5 per share. So most of these small companies are new in the development stage, which makes them a risky investment. But if you know how to pick a winner, penny stocks can make a great investment. What is a pump and dump scheme? A pump and dump scheme is when scammers launch false information about a company in order to trick the investors into buying their stock quickly. Once the price of these stocks skyrockets, the scammer will dump, that is, sell as part of the stock at its peak price. And since no one else can sell their shares, this price drop causes the stock's price to plummet. And because the victims purchased high, they'll end up buying low when the stock price falls back down after the scammer has unloaded his shares. How are penny stocks easy target to pump and dump schemes? Penny stocks are easy to pump and dump schemes because they can be manipulated in 3 ways. Number 1, broker versus retail individual investors. First, when the broker, the professionals, control most of the supply, it's easier for them to push around prices when they want. Since retail investors cannot access that information, they usually don't know what's going on until the stock starts to drop. Number 2, the company is not regulated by SEC. The second reason why penny stocks are an attractive target for pump and dump schemes is because that these companies aren't regulated as closely as larger companies. This allows the scammers to use misleading information to raise the value of the penny stocks without consequences. Number 3, many penny stocks are untraded. Some of the most popular penny stocks are never traded on an exchange, which makes them more susceptible to pump and dump schemes because there is no price transparency. These types of companies usually only trade over the counter, OTC, which can make it difficult for investors to know how the price is being set. Where to find penny stocks? Some legitimate companies trade on the OTC, but there are also many frauds, so knowing what you're doing before you make a move is critical. Here are 3 resources for finding penny stocks worth investing in. Number 1, OTC markets. You can find a list of OTC penny stocks and begin investing in these companies by visiting www.otcmarkets.com. There, you will find a ton of information about trading and investing, as well as the latest news regarding penny stock companies. Number 2, Google. By doing some research on your own, you can determine which penny stocks are good investment, and there is nothing best for research other than Google. You can find valuable information about these companies on different types of media such as websites, newsletters, and newspapers. Number 3, penny stock newsletter. Penny stock newsletters are more valuable than Google because they give valuable information about the market and penny stocks and alert investors when a company has reached a new high or low price. You should also see if the newsletter offers a free trial so that you can try it out before making a large investment. What to look for in a penny stock? When you start looking for a penny stock, there are some key points to remember. Number 1, look for news and media outlets regarding the company. If the company has active press releases or other forms of media, it can hint that the company is in fact legitimate. Number 2, ensure the company has a clear business model. If the company's business model isn't clear, you should avoid investing in that company because there's probably something wrong with it. And if their plan seems too vague, they're either trying to hide things from the investors or trying to sell an idea instead of a product. Number 3, find out if the company has a product or service. If there's no product or service, then that company is probably selling an idea rather than legitimate investment opportunities. And as mentioned earlier, if business model isn't clear, it's probably best to avoid investing in that company altogether. Number 4, check the company's financials. You should use this information to make sure that the company can pay its bills, has made a profit recently, and had losses in the past. Try finding financial statements on their website or at opensecrets.org if they are publicly traded. Number 5, examine the competition of the company. If there is no competition, you should stay away from that investment opportunities. Otherwise, the price of the stock will be too volatile and it won't offer reliable return. Is penny stock a good investment? Penny stock can be a good investment, but you need to take time to find out how the company is valued and what sort of risks are involved. When you do this research, you will be able to make an informed decision about whether or not it's worth investing in that company. Once you've done your research and decided penny stocks are right for you, you should start looking at different types of stocks and find the one that's the best for your goals and how much time and money you can afford to invest. Who should and should not invest in penny stocks? As you can see how pump and dump schemes manipulate penny stock prices, it is important to research before you start investing in penny stocks. Therefore, if you find yourself unable to do this type of research very well or are too busy to spend time needed, it is probably best for you not to invest in penny stocks. Penny stocks are highly volatile and need to be done with utmost care, and it can be hard for beginners. So if you are a beginner and lack experience in dealing with penny stocks, it is probably best for you to avoid this type of investment. Similarly, if you aren't willing to do enough research and analysis before investing your money, you should also stay away from penny stocks. However, if you are ready to invest with all proper research done successfully, you can make a significant profit. Penny stocks are low-value, high-risk investments that can be easily manipulated. You should not invest in penny stocks unless you really know what you're doing and have the time to monitor them closely. As long as you know the risks and do your research, penny stocks can make a great addition to your portfolio. But only if you play by the rules and find opportunities that aren't subject to manipulation.